Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about car Lotz. The ticker goes by LOTZ. I'm going to go through due diligence and then technical analysis and what I think about this one. So let's jump right into this one. So car Lotz. To cut it short, you can buy, sell, and finance vehicles onto here. They have multiple dealerships across the United States, including in places like Seattle, Tampa, Charlotte, Chicago, Orlando, the list goes on. And you get to see here a good list of locations plotted on the maps in the United States. Now, we can go back towards some of the news, for instance, such as just last night on May 10th, 2021, they posted the first quarter revenue growth of 123% to $56.6 million, ahead of expectation. Now, the first quarter unit sale growth grew 76% to 2,554, ahead of expectation. And so some of the results here. So we already know the net revenue increased around 123% and retail increased. The net loss attributable to common shareholders was around $15 million, or around 15 cents per diluted share for the first quarter in 2021 versus $1.5 million or 3 cents per share recorded in the year ago, or in 2020. So adjusted EBITDA was putting around $16.9 million compared to $1.4 million in the first quarter of 2020. And the CEO mentioned that they're excited to announce that in advance of much of the growth they're able to drive this year, they built a new hub development and a nationwide expansion. They already are posting 123% growth in revenue, and we sold a record of 2,554 retail units in the first quarter alone and opened 3 new hubs in Seattle, Washington, Merritt Island, Florida, and Nashville, Tennessee. And we have announced the plans of opening new hubs in Charlottesville, Barksfield, Highland Park, and Clearwater, Florida. Now that is expected to happen in the coming months. They're also very pleased with our new hubs performing to date and have signed close to a dozen leases and have several more leases under negotiations for the year 2021 and 2022. And so you get to see some of the guidance they've given before. For instance, opening 3 new hubs, which they actually met. Retail units sold, the guidance there was around 1,900 to 2,100. They beat that by 2,554. Net revenue of $42 to $46 million. They met that with $56.6 million, so exceeded expectations there. And gross profits, $1.6 to $2 million. They met that around $2 million, met expectations. Now, retail gross profits per unit were $1,300 to $1,500, and they met around $1,182 below expectation. Meanwhile, the general net loss, the guidance was $16 to $15 million, and they met it with around $15 million. Now, the current 2021 guidance coming up for the entire year, you're looking into a capital expenditures somewhere between 45 to 50 million. So no change there. New hub openings around 14 to 16. There's no change. Retail units sold around 18 to 20,000 units, with 13 to 15,000 in the second half of the year alone. They haven't changed that. And net revenue around 335 million to 375 million. So there's no change there. And gross profits of 30 to 37 million, no change. And retail GPU of 1,800 to 2,000, no change. Now the adjusted EBITDA, it's $79 to $67 million negative in loss. And here they provided an adjusted EBITDA guidance instead of a net loss guidance as a result of the change in the accounting treatment of the company's warrants. So moving on from there, I do want to give you a bit of an idea on some of the news that they've been receiving. So for instance, yesterday, they recorded a record revenue and retail unit sales in the first quarter. Car Lotz accelerates growth in the Sunshine State. Car Lotz names former AWS manager William Valier as SVP of Technology. Car Lotz plans second Windy City opening. Car Lotz growth continues with the first Golden State hub. And Car Lotz Incorporation announces the first quarter of 2021 earning date. That all alone happened within a month. And you keep going further backwards, you see that they are somewhat active on PRs in general. So we have now an idea, and nothing is better than to go over the presentation to give you a good overview on how they operate. So first off, the traditional used car process goes from supply of millions of used vehicles, it goes to a dealer, to a wholesaler, or either or, and goes to an auction house, second wholesaler, dealer, and demand from millions of retail buyers. Now there's multiple steps, massive friction, value leakage, frustrating, expensive, and if there's more of a black box to the entire process. Now the car lots process supplies millions of used vehicles, and there's also demand for millions of retail buyers. So they manage to function traditionally delivered by multiple intermediates and allows sellers direct access to retail demand. And it's 100% data driven for transparency to all participants. Let's take a look into some of the general case studies they have. For Lotz corporate vehicle sourcing partners earn on average $1,000 more by retail remarketing trademark through car lots than by wholesalers. So gives you a bit of perspective there. Now the price upfront and haggle-free price ranges generally lower than competitors. Meanwhile, for sellers, higher average proceeds than other alternatives. Selection and customer service are also part of it. So we also have the industry itself, highest customer satisfaction, around 84% compared to something like Carvana 82, Shift 70, 52 for Vroom, and auto retailers around 7%. Now moving on, sellers receive significantly more value per vehicle in an average of 30 to 45 days to sell, continuously expanding competitive moat through higher returns, lower days to sell, and proprietary retail remarketing technology. Now moving on as well, so there's a lot of good information there, a lot of value to that can be added to the shareholders by this presentation itself, and just a bit of a perspective here. Best-in-class unit economics and capital-efficient growth. So 2020 estimated to 2023 estimated. There's a projected revenue of CGR of 143% at a gross revenue per unit of $1,750 to $1,900. Now, if you were to look into Carvana, Vroom, and Shift, they all are sub 100%. Shift being 92%, Carvana 42%, and Vroom 64%. Now, capital invested to date, you're looking only at $35 million in car lots compared to $2 billion in Carvana, $1 billion in Vroom, and for $500 million for Shift. So there's definitely a lot of room to grow there. Now, keep in mind, this presentation is a little bit outdated back from January. So there might be a little bit of some of the investments highlights are a little bit outdated, but still will give you a good perspective. So moving on from here, I do want to give you a bit of a comparison between them and some of their competitors. For instance, here on, you get to see deep pool of sourcing partners going on with Best Bank, ARW, the list goes on there. Diving a little bit further down, you're looking into the estimated revenue in millions being 113 to 114 million in 2020, 356 million in 2021, 2022 has $945 million, and 2023 around 1.5 billion to 1.7 billion. Now, if we were to take just the more of general sales in 2021, you're looking at 356 million. So when you're looking into the market cap of around 633 million, that gives you somewhere around price over sales for 2021 to be somewhere around 2. Now, currently it's a 305 for the SP 500 price to sale ratio. Meanwhile, the mean in general over all these years, you're looking from 2000, it's 160. And so for that, going back towards the presentation by 2020, you can easily see around a 30% to, or I'll probably say even 50% by 2022 for that market cap to reach that 160 price over sales. So there's definitely room to grow, given that they actually meet this revenue growth. Now, another part of this one here is net revenue. There's a lot of question towards this in terms of gross profits. You're looking into 2020, estimated 11%, 12% for 2021, 2022, 30%, and 2023, 14%. So there is a CAGR expected of 162% in terms of gross revenue. Now that is a little bit massive, but they're trying to scale up massively. So hopefully they don't run through a lot of debt when it comes to that. They're very optimistic, and sometimes what happens is that they do raise a lot of offerings in longer term to finance these very massive plans going on from just millions in terms of assets to billions. Now, another thing here is a little bit of the revenue comparison between Lotz and Carvana revenue IPO in millions. And they're looking into this estimated from 2020 estimated to 2023 in comparison to 2016 actual to 2019 since Carvana went on the IPO in general. And you get to see there was a massive growth of around $3.6 billion, and they're telling you they're only going modest with $1.4 to $1.65 billion, or $1.6 billion, my bad. Now, a quick thing here. Pre-IPO capital raise in millions for Lotz was around 35 million. Meanwhile, Carvana was around 905. Vroom 1.1 billion and Shift around 303 million. Now the current revenue slash pre-IPO capital raise, looking at 3.2 in terms of Lotz, showing that technically they are in comparison, they are a lot better when you look to Vroom, Carvana, and Shift in terms of revenue over the pre-IPO capital raise. Now, in terms of 3-year revenue increase in plan over IPO capital raise, you're looking to 4.7 times, which is one of the lowest in comparison to its competitors. Now, another thing, I know I'm almost boring you all, so let's just move on further down towards this right here, the pro forma valuation. The current pro forma valuation shows that this total enterprise value is somewhere around $827 million. Now, a part of that includes an equity value in $1.1 billion, given at a price share of $10 and a total share outstandings of $114 million. Now, that $827 million dropped to $633 million as of today. Now, we don't get exact estimates of their actual worth, or at least not in very much details. I'll show you that in a second in the SEC filing. But in general, we get to see a bit of an understanding of their TEV over 2022 estimated revenue of 0.88, making them perhaps an interesting play for 2022. So overall here, what we're seeing is that the total assets is sitting somewhere around 326 million, with a total liability of somewhere around 100 million. Now, the total assets giving 330 almost. Going back towards if you recall, the market cap is sitting around 600. So you're sitting almost at a price over book of 2. Meanwhile, the SP 500 and the general market average sits around almost 4 to 5. And so we get a bit of perspective that it does seem to be on book undervalued, although institutional investors have been dumping this one for a while. Ever since it almost debuted as a reverse SPAC and the merger gone through, it looks like they are continuing to do that. Now, before moving on towards technical analysis, if you'd like to see more contents like this, make sure to scroll down below, click that like button, subscribe, and leave notifications on. If you'd like to join our Discord, it's totally free in the description below. Let's jump right into the technical analysis. So from a technical analysis point of view, what we get to see here is that on the one-day perspective, the MACD is actually dropping rapidly. So that might be a dangerous part. Momentum has almost crashed to -2, one of the lowest it's been for a while. Now, the 10 SMA is above 30 EMA. Yes, it's bullish, but currently on the ADX, it shows almost a negative trend. And what we get to see here on the stochastic fast and stochastic slow is that perhaps there might be here a chance for a reversal. However, on the Fibonacci retracements, what we get to see here is that there's significant support at the $5. Significant resistances, 687, 802, 895, 988, 1121, and 1290. And so from a price line action point, what you're seeing here is a very strong support of $5, and then below there we created one around 560. Significant resistances are sitting at 642, upwards to 697, upwards to 775, going upwards to 806, and from there around 905 to 947, 1023, 1069, and 1152. Comes to the questions. Ed, what do you think about this one? I'm definitely thinking that they do have a lot of potential. They are a little bit undervalued for the time being, but it seems that the stock or investors or retail, something's going on. There's a little bit shady that it dropped 50% from the IPO itself. Institutions aren't really liking this one at the current time being, and it looks really interesting. However, I do think this is almost undervalued for the longer term if they actually do follow their guidance. What What do you think about the sticker? Links mentioned down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.